Good morning, children. After the discussion of maintenance of partners capital account, today we will discuss about various adjustments which are very much useful for the next lessons. In that, first we have distribution of profits among the partners, interest on partners capital, interest on partners drawings, interest on partners loan, and partners salaries and commission. There are so many items which you have to understand in each case. First one we'll see about a distribution of profits among the partners. Last year we have studied about sole proprietorship and who is going to share profits or loss. Example, we had prepared trading account, profit and loss account and balance sheet. In trading account we used to get gross profit or gross loss that we will transfer to profit and loss account. There we will get net profit or net loss that we will transfer to balance sheet. Here in partnership accounts, after preparing trading account, the gross profit or gross loss we will transfer to profit and loss account. After preparing profit and loss account, the net profit or net loss will be transferred to profit and loss appropriation account. In profit and loss appropriation account, there are certain adjustments which should be adjusted to get the final amount. That final amount is known as divisible profit or loss, which should be distributed to the partner's capital account. That amount finally we will transfer to balance sheet to get it tallied. So here I told you there are so many adjustments. In that, first one distribution and second one partner's capital and drawings, etc. We have to discuss about these adjustments deeply. So let's move one by one how to distribute partners' profits. When partnership deed is silent, how the adjustments has to be made. Let's see one by one. Distribution of partners' profits. When partnership deed is silent, it should be distributed in the equal ratio between the partners. Example 1:1, like that. In partners' capital, interest on partners' capital should not be given, and interest on partners' drawing should be calculated on the base of average period of 6 months. Interest on loan must be given at the rate of 6% per annum, and partners' salary and commission should not be given. So to distribute partners' profits or loss, we have to prepare profit and loss appropriation account. To prepare profit and loss appropriation account, first we have to transfer net profit or net loss to the respective account. Credit side, all the income items we have to transfer, and debit side all the expenses we have to transfer. And credit side, we have to bring down net profit from profit and loss account, and interest on drawings also must be credited, and debit side any net loss if there, it should be debited. Interest on capital must be given to the partners, and salary, commission too. Final figure is known as divisible profit or loss, which should be transferred to partners capital account. From partners capital account, it should be transferred to partners capital account. Finally, balance sheet will be prepared. Why we have to prepare profit and loss appropriation account means it is the extension of profit and loss account which should be prepared to appropriate or to distribute the partner's profit or loss after the adjustments. These adjustments we have to learn one by one. For referring journal entries, go through Google Classroom page notes, page number 19 to 20. I'll give you one example to prepare profit and loss appropriation account. Let's go to the problem. Pramod and Pawan commenced their business with a capital of Rs 80,000 and 60,000 on 1st April 2011. They agreed to share profits in the ratio of 3:2. For the year ending 31st March 2012, they earned a profit of Rs 24,000 before allowing the adjustments. First one, interest on capital must be given 6%. Annual salary to Pawan only 5,000. Interest on drawings to Pramod and Pawan is 1,500 and 1,000 respectively. Partners drawings for Pramod 15,000 and Pawan 10,000. So we have to prepare profit and loss appropriation account. Here partners drawings have been given. Interest on drawings also have been given. When interest on drawings has been given already, no need to calculate any interest again. We can directly take interest on drawings as it is. Credit side, we have to transfer net profit amount, that is 24,000. Interest on drawings to Pramod and Pawan, 1,500 and 1,000. And debit side, interest on capital we have to calculate. It is given as 6%. So for Pramod, capital is 80,000. 80,000 into 6%, it is 4,800. And 60,000 into 6%, 3,600. So total interest on capital is 8,400. And Pawan's salary alone is given, that is per annum. So 5,000 as it is we will transfer. When we tally, we will get divisible profit. So that should be distributed in the ratio of 3:2. Pramod 7,860 and Pawan 5,240. So for getting more understanding, you can refer the numerical problems 3rd, 4, 5, 6 and 7. Okay. In the next adjustment, we will see about interest on partners' capital. There are so many points to be remembered. When partnership deed is silent, no interest is to be given to the partners. And if it is agreed by the partners, interest can be given at any rate. It may be 5% or 6% or 10%. When firm incurs loss, no interest is to be given unless it is a charge. What is the meaning of charge? Charge is compulsory. If it is an appropriation, it should not be given. When it is said as charge, it should be given. So when firm incurs loss, no interest is to be given. Next, interest must be given only when there is sufficient profit. If there is no sufficient profit, or if interest on capital is exceeds above the profit, it should be restricted up to the profit. For example, if the profit is 10,000, when you calculate interest on capital, it is 12,000 means now it is exceeds 10,000, so it should be restricted up to 10,000. So there are so many adjustments for that also. We'll see next. Next, interest should be calculated on the opening capital as well as additional capital if any. We have to see the date of introduction of additional capital. As per that, we have to calculate interest on additional capital also. Then finally, interest on capital is to be that is interest on additional capital is to be added with interest, and if any withdrawal is there, it should be deducted. So to refer interest on partners capital adjustment, go through illustration 4, 5 and 6. It is given in the Google Classroom also. Thank you, children.